accounting students. Exercise 4.1, looking at page 105 in your textbook and looking at your workbook page. I'm sorry, I don't know the page since I have a different setup here with Excel. But your first exercise in chapter 4. All right, so looking at the problem, it says, it tells us about the accounts that are available for us with Ray's shipping service, and we need to look at the transactions, and we need to determine which account will be debited and which account will be credited. So this is like a drill. We're not really doing it, but you can see that I have set up T accounts underneath this, and that's so that I can talk us through the transactions, and then for you guys you just have to put in the numbers for the debits and the credits. So looking at the accounts now, from now and forward, all of our accounts will always have an account number associated with it. And looking at that list, you can see they are in order by number, and all of the 100s are assets, the 200 is a liability, the 300 is a capital account, the 400 is a revenue, and the 500s are expenses. That is standard. Now, you might find that the account number might be a little bit different when you're doing a different company, and that's fine as long as they stay inside of the numbering system that we have. So again, 100s for assets and so forth. All right, looking at the first transaction then, it reads that we gave a cash refund of $750 to a customer because of a lost package. The customer had previously paid cash. All right, so I'm going to explain using the T accounts, and then we'll put the answer up top. Okay, so if we're using the T accounts, a cash refund of $750. So in our cash, we increase on the debit side and we decrease on the credit side. And we definitely are going to be decreasing cash because we are giving money back to a customer. So we would be crediting on the cash side, and we would be debiting accounts, fees revenue, sorry, fees income. Revenue, fees income. So normally fees income is a revenue account, and normally all of the action is on the credit side. They started us off with a hard transaction because it's kind of an opposite transaction. We're fixing a problem that a customer had. So normal side of the revenue account is the credit side. Normal side of the cash account, the balance is on the debit side. But we do use both sides of the cash account for sure, right? So the answer to this question is 401 and 101 for which accounts were debited and credited. Okay, transaction 2, we sent a check for $1,050 to the utility company to pay the monthly bill. I've said this to you guys before, but I always do the cash first, or I a lot of times do the cash first because it's easy to know if you paid or received money. So if we send a check, we know we paid, so that would be $1,050 under the cash account, and the utility company would be a utilities expense, $1,050 there. So we debit $517 and we credit $101. Okay, number 3, provide service for $7,800 on credit. Anytime you see provided service, that's your revenue. So $7,800 of revenue, and the customer did not pay. They're going to pay us later, so instead of cash we get accounts receivable, and the debit side is our normal side, so $7,800 there. So our debit is 101 and our credit is 401. Okay, and then number 4, purchased new equipment for $4,600 and paid for it immediately by check. All right, so we're gaining equipment for $4,600, and we paid with a check, so we're decreasing our cash by $4,600. All right, so our debit is 131 and our credit is 101. Okay, number 5, we issued a check for $3,500 to pay a creditor on account. So a creditor on account is our liability. Okay, and we are reducing our liability. So the normal side of a liability is the credit side, but we are reducing our liability. We're paying on our debt, so that's $3,500 there. And our cash, $3,500 out. All of our money goes, right? So then we have 202 is our debit account and 101 is our credit account. Number 6, we perform services for $15,250 in cash. We are gaining cash this time, so $15,250. And our fees income, $15,250. So your answer is going to be 101 and 401. Number 7, we collected $6,250 from credit customers. So we got the cash, $6,250, and we are reducing what our customers owe us by $6,250. So the answer to that is 101, and the credit is 111. Okay, 3 more. Number 8, the owner made an additional investment of $25,000 in cash. We're adding cash, and we're adding to our capital, which adds on the credit side. Okay, so that is 101 and 301. And number 9, purchase supplies for $3,250 on credit. Supplies is an asset, so we're going to increase our asset by $3,250. And we did not pay for them with cash, so that's a liability. So we're adding to our liability $3,250. So that is a 121 and a 202. And last, issued a check for $37.50 to pay the monthly rent. So cash is leaving us, $3,750, and we are adding to our rent expense $3,750. So 511 is our debit and 101 is our credit. All right, so you only are doing, of course, these plopping the numbers in the debit and credit slot. I just thought it might be helpful to watch the T accounts work while we did the transactions together. Just a little reminder, I set up the T accounts in order, so our change colors here. Our assets equals liabilities plus owner's equity. I'm dropping everything over here into owner's equity, kind of like on your cheat sheet. Capital is really our owner's equity. Revenue and expenses impact our capital after we do our financial statements. The one thing that's missing here is the drawing account, and they didn't give us the drawing account to use because there was not a transaction that had a drawing in it. All right, that's the end of exercise 1. I will start a second recording for exercise 2.